So we're going to look at the sales ledger control account, sometimes known as the trade receivable ledger control account. Quite often inspect sales ledger control. It's another part of 3.4 of the specification, which is the verification of accounting records. Alongside bank reconciliations, these have not come up that much on A2 papers. Predominantly 3.4 has been assessed through correction of errors, suspense accounts. That isn't saying it's coming up, that's saying there is the possibility. And understanding the sales ledger control account is really important when it comes to incomplete records or any other areas of accounts and seeing what would affect the trade receivables figure. So what we've got to be looking at here is which side it goes up, which side it goes down, obviously, so debit or credit side, but equally that it's a memorandum entry, so it is not part of the double entry. So if we sell something, we will debit the customer's account and credit sales, and the total will be recorded separately, like I say, not part of the double entry, to the sales ledger control account. The purpose of the sales ledger control account is then we've got a check, so we can then look at the list of our customer balances, how much do our customers owe us, and then check it against the control account to see if they agree. If they don't, we can then see that we've not entered the invoice correctly, not entered the payment correctly, whatever it might be, and we can then double check our records. So just remembering that 3.4 verification of accounting records is all about something that can help us check. Now, what we've got at the bottom here is just a list of transactions that could appear in a sales ledger control account. So if you had a standalone question, one of which we're going to go through on the next slide, it is a case of just putting everything on the correct side, and you're going to get a mark for each, which is nice. Then you get a highlighter and just go through each one of these. And so let's have a little look. So our first ones are balance brought down. And so from a balance brought down, so the opening balance on the sales ledger control account, what we're going to ask ourselves is it an asset or is it a liability? Well, trade receivable is an asset, it's a current asset, people owe us money, so that will be entered on the debit side. Irrecoverable debts written off. I'm going to change my color here because that purple didn't show up very well. Let's see what yellow does. That's a little bit better. So an irrecoverable debt written off, will that increase or decrease the amount of money that we're owed? So an irrecoverable debt written off will clearly decrease, so we'll pop it on the credit side of the sales ledger control account. One that's frequently incorrectly entered is a dishonored check. Now, dishonored check is a fancy phrase for a bounced check, so a check that a customer has given us that has not cleared the bank account. This has to go on the debit side of sales ledger control, because what we've got to be thinking here is that we did have the payment, so it did reduce the amount we're owed, and now the payment hasn't gone through, so we're owed that money again. So we have to put it on the debit side of sales ledger control to identify the fact that we're still owed that particular amount of money. Conversely, if we receive any payment, that is going to go on the credit side of the sales ledger control. It's going to reduce the amount that we're owed because our customer has paid some of the debt. If we would like to, because of a debt is old, there is a possibility that we can charge interest on our customers that are overdue, that are late. That would go on the debit side because we're increasing the amount they owe us. Discounts allowed, so just remind ourselves, discounts allowed is any discounts that we allow our customers to take from their payment if they pay within a certain amount of time. So obviously encouraging quick payment to improve liquidity. That has to go on the credit because it's reducing the amount they owe. Credit sales, let's clarify, it is only credit sales that go in the sales ledger control account, not cash sales, because cash sales are paid instantly, so it's not relevant for sales ledger control. But credit sales, clearly the more we sell, the more we owe, so that would go on the debit side. And then finally, contra. So a contra entry is one where we have two transactions which balance each other off. There's no need for an exchange of money, and that is the case with sales ledger control in that someone could owe us money and we owe them money, so it balances off each other. So the contra would go on the credit side of the sales ledger control because it reduces the amount of debt that we have. Okay, we'll look at an exam question. So this is from AS May 2020, question 13.1. Now you'll notice that on the list there are some transactions which are not relevant for sales ledger control and some that are there for purchase ledger control. It actually was a question which had 13.1 sales ledger, 13.2 purchase ledger control. I will go through purchase ledger control in a separate video, but I think it's useful to note that sometimes you'll have a list of transactions and some of which you do not include in your answer. They will put in the red herring or what about the outlier, whatever way you want to call it, to try and trick you. So we've got to be careful that we only highlight the ones that would be entered in a sales ledger control account. So if we look at it, purchases obviously has nothing to do with this, but it's also cash. Cash sales would not be included in the SLC because it is items we've sold and been paid for straight away, so would not be in the sales ledger control because there's no debt, it's just instant payment. Discounts allowed, as we said on the previous slide, is discounts we give our customers if they pay us quickly. So that would go on the credit side. Discounts received. Now we receive discounts from our suppliers, so that's purchase ledger, not sales ledger control. Payments to suppliers, again, that's purchase ledger control, not sales ledger. Receipts from credit customers, let's not fall for this. Receipts just means we've received money from our customers. So that's going to go on the credit side. A returned check from a credit customer. So this is a dishonored check. So the checks come back from the bank. That will go on the debit side because we increase the amount that we're owed. And so they've got to pay us it again because that payment didn't go through. Purchase journal, that's clearly for the purchase ledger control account. And then finally, sales journal total. The sales journal total is the amount we've sold. So we put that on the debit side as 45,000. We don't use the credit cash sales. We don't do anything silly with any of the additional. The sales journal total, we cannot change that figure. That is the 45,000. We then have two notes. One of them is about overpaying a supplier, obviously not relevant for sales ledger, but one of them is we've created a provision for doubtful debts of £680. Please do not fall for this. A provision for doubtful debts is deducted from trade receivables before you prepare the statement of financial position, but it's a T account in its own right and does not ever go in the sales ledger control account. If you put provision for doubtful debts in your sales ledger control account, that is an alien item and will lose you a mark for balancing because you put something in the wrong place. Right, if we go on the next, we can see the actual mark scheme. This is how it was presented. So as we said, we've got sales on the debit side, 45,000. You're getting 1 mark for that. This is nice. The dishonored check, £200. You're getting 1 mark. They put bank as the entry, and that's what it would be because it's money that we thought was in the bank account, so it was on the credit on the bank account. So now, sorry, a debit on the bank account because there's money going in. So we're now going to have to credit the bank account to clear it, and that's going to debit the control account. Any payments we've received, again, 10,200. The discounts, 45. So really, it's nice 4 marks. You've just got to learn those sales ledger control account. What can go on either side? And the balance brought down, 34,575 is own figure. But let's have a look. As long as you don't use any extraneous or alien items. So if you use cash sales, the provision for doubtful debts, or any of those purchase ledger items in there, you would not get that own figure mark. So really, it's only if you put something on the wrong side, or if you put everything in that should be there but missed aside for like 1 or 2. I mean, there's not too many transactions anyway. But that is a quick 5 marks to get. Really useful for other questions. So we'll have a look at purchase ledger control in a separate video. But good luck.